What's up, traders? Mark here. Today is Saturday, July 21st. Well, traders, I got an exciting training for you today. I want to continue talking about market structure, and if you haven't watched my last video that I did probably a month ago now, you might want to go back and review that. I'm gonna review the content in that video as well as show you all some really exciting things, and then talk about some things that are working really well for me right now. So let's go ahead and get started. Alright, so I have a chart here of the pound dollar, and what I want to do is I just want to review the objective way that I'm identifying market structure. So if you're not familiar with market structure, it's just when a price or when a chart is making, like lower high, which is, here's a high, here's a lower high, here's a low, here's a lower low. It's a way to identify trend. If a market is making lower highs and lower lows, then you're in a downtrend. If it's making higher highs and higher lows, you're in an uptrend. And then it depends on what time frame you're looking at to identify that trend, right? So for example, I could be in a downtrend on the 60-minute chart, whereas I could be in an uptrend on a 5-minute chart or a daily chart. So let's first talk about the market structure component. So what I'm using is if the market is heading down, I'm looking for red bars followed by green bars. Okay? And then if the market's heading up, I'm looking for green bars followed by red bars. Pretty simple. Okay? Now, here's what I'm doing. So let's just start here. Market heads down. I have a green bar right here. So I'm going to look at it. I'm going to draw a line at the high and the low, and if price closes above the high with a green bar close, not a red bar close, I could have a situation where I gap above and then have a red bar close. I need a green bar close. So I'm looking for an up green bar, then a green bar close prior to closing below the low. So if that happens, then that is my second higher close during this period where price is moving down. And then I personally have a max number of higher closes that I will trade in a given pattern. So for example, right here I have one green bar, 2, 3 higher closes. This is not a higher close. 4 higher closes. So I have 4 higher closes in this pattern. My personal max is 3. Now, that's a personal preference, okay? There's no magic number, but I need a minimum of 2 and a max of 3. My next criteria is that I have a close below the lowest low of the move, which is the low of this red bar. So I have my close below there, and then my next criteria is I need to have a lower high. So this high has to be lower than the prior high. Okay? So to repeat that, I need a minimum of 2 higher closes. I need to close below the lowest low of the move. I need a lower high, and for me personally, I can't have more than 3 higher closes. So this pattern right here does not count, right? I only have 1 higher close, this one. So let's move on. Here's my next green bar. I only have 1 again. Now let's go down to here. We're going to analyze each one. So here's 1, here's 2, here's 3, and then here's 4. Then I finally get my close below this lowest low right here. but I have 4, so that doesn't count. All right, so now let's start looking at the other side. All right, so I have a red bar, so here's my low, here's one lower close, here's 2 lower closes, here's 3 lower closes, and then price goes on to make a close above the highest high. So at this point, I have a potential buy zone. Not a potential. I have what I would consider a buy zone right here. Okay? Now, price hasn't come back into it, but if it did, I could look for a potential trade. Okay. Does that make sense? Now, let's just consider that's one signal, right? If price were to come back in here, that's just one signal. Now, what if I were to add more signals to this scenario? What could I do? Well, maybe I'm looking for a pattern in here. I don't know, we have a lot of pattern traders out there. Or what if I went down to a lower time frame? Like a 5-minute. And I looked for the exact same pattern while price was inside of the higher time frame zone. Well, I kind of like that. So that's 2 signals. 2 signals inside of one. Now what's that going to do for me? Well, that's going to increase my edge, thereby increasing my probability and increasing my reward to risk, which is arguably the most important aspect of trading. So let's take this one step further. I'm going to apply an indicator that I have developed, and it plots structure and volume on any time frame that I want. So let's take a 4-hour chart, apply 4-hour structure and volume onto my 60-minute chart. So now let's look for the exact same thing inside of these zones. Now what I mean is, let's find my market structure zones, but only when they line up with the 240-minute structure. Okay, so let's look at this move. The high of that bar is 3267.2. The close of this bar is 3266.8. I don't have a higher close. So this is not my market structure pattern. What about right here? Here's a green bar. Actually, it starts all the way back here, doesn't it? This is my market structure pattern, right? Let's draw my rectangle. Okay. Now, I have my market structure pattern on the 60-minute. I have my 60-minute, my 240-minute structure. I'm sorry, this actually starts, I just saw this. This actually starts all the way back here. Right there. That's a really big zone, but regardless, all I'm caring about right now is right here, right? Okay, so at this point, I now have 2 different things telling me the market could go down. Now, what if we were to go to the 5-minute at this point, right here, and see what it looks like? Okay. Well, here is a potential pattern, right? However, it gets broken before it breaks the low, and then right here we get 4 higher closes, so that doesn't count. 1, 2, 3, 4. 4 higher closes here is not going to count. Here's one. 1, 2, 3 higher closes, and I have another zone here, and we retrace back into it right here, and I get another 5-minute zone. So right here at this point, I have a bunch of things that line up telling me that this thing should go down. So what I want to do at this point is I want to look at my ATR. I'm going to look at my prior bar, which is this one. My ATR is 4.1. Well, that's 4 pips. So I'm looking at a trade with 4 pips of risk, and I want to try to make 10. That's right. I'm looking at a possible 10 to 1 reward to risk ratio. So if I risk $50, I want to try to make 500. Or if I'm risking $10, I want to try and make 100. Here's my entry bar. It turns blue for me. I want to enter 1 pip below the low of this bar, which would be 32.12.3. And I'm going to risk 4. So if I'm in at 32.12, I need to get down to 40. I need 40 pip move. So now I got to do some math here. So what is that going to be? 31.72? I think so. And there we go. There's your target, right? And it keeps going in case you, for whatever reason, didn't get filled. All right. Now, if we want to move over and let's look at this move, same deal applies. So we start going into the zone right through here, and you can see that I don't have any market structure on my 5-minute. Still don't have any till right here. Okay, right here. And look what happens, gang. They come and hit it. Actually, I get some right here too. So we come and hit it perfectly right here. My entry be on this down red bar. Now I have 6 pips of risk because my ATR is 6. My entry is going to be 64.2. Still in the trade, never stops me out. Now I need to get down to 62.04. Which doesn't look like it's going to make it. So that this one is not going to make it, is it? So I got in at 60. Let's see, what is it? 64.02 or 64.2, and I need to get down to 32.04. It makes it down to 32.16. Okay, so in that scenario, oh, it looks like it actually does go lower. Whoops. Sorry, guys. Let's go back and see if we end up getting stopped out. So my stop is going to be 70.2 right in here. Let's just draw a line at 70.2 right there. And then you get your target. So it did work out. Anyway, gang, I just thought I'd share this with you. And what I'm working on right now, I'm doing this on stocks currently on the S&P 500. And so because there's so many stocks in the S&P 500, I can typically find a trade. And it's been working really well. So I'm going to try to start automating some of the process, which for me just means that I have a market analyzer tab right here that has all of the S&P 500 on it, and if I have one that's meeting my criteria on the 60-minute, it will alert me, and then I can start watching it on the 5-minute. And there's typically plenty of time to be able to get into a trade. It's on a 5-minute chart, so I usually have at least 10 to 15 minutes. Now, if I'm working and I can't get to this, well, then I can do this on a much higher time frame, right? So I could change this from a 60-minute into a 120 and then analyze a even higher time frame zone. And then maybe on this one do a like a 15-minute or maybe even a little bit higher. So that would give me an hour typically to be able to get into a trade. So gang, I'm still working on my website to start getting some regular emails out to you guys. I know that I've been talking about this for a long time, but there's this coding stuff is taking much more energy and it's taken a lot longer than I had ever anticipated. But go to the website at tradebythenumbers.com, get on the list, and I'm going to put together a free market structure training over the next probably 3 to 6 months. I'm going to have this thing done, and I'm going to just start blasting it out to you all as kind of a thank you for taking time to listen to my channel and just listen to me ramble. All right, hope you all are doing great. Talk to you later.